All right, folks. Hi everyone. In this series, I want to show you guys how to break down a chart. Now, in breaking down a chart as a newbie, so many persons make mistakes. And one thing you should understand is that if you make a mistake from breaking down a chart, that can lead to so much losses. It can lead to you seeing the market from a wrong perspective. It can lead to you seeing the market from an unseen and unrealistic perspective. So what we are going to do this morning, I want to show you guys how to properly break down a chart. Now, let's get into it. Okay, guys, in breaking down a chart, so many persons would start from any time frame at all. That is wrong. You want to start from a bigger time frame and then scale down to a lower time frame when you're breaking down a chart. The reason is because you want to see the market with an eagle's eye. You want to see it from a larger perspective. You want to know what the big players are doing. Mind you, you need to understand what drives the market. What mainly drives this market is basically fundamental. Every candlestick that you see in this marketplace is printing out data from fundamentals. So what we are going to be looking at in this section is how to break down a chart from the monthly, the weekly, and then to the daily, and then probably you can go to any time frame of your choice for proper entries and exits. So in breaking down a chart, always bear in mind that the time frame used in spotting the trend of the market is usually the daily time frame. This is because a month can contain a trend. 3 months can have a prevailing uptrend. 4 months can have an uptrend. 5 months can have an uptrend. So if you look at a monthly chart and then you're looking at just three candlesticks, you won't know if that market is currently trending up or down by merely looking at three candlesticks. So that's on a monthly chart. But then if you're on a daily chart, you're looking at 90 candles, you easily identify if the market is printing what higher highs and higher lows or lower highs and lower lows. So guys, without wasting much time, let's dive right into it on how to what break down the chart from the monthly perspective. What do you do with the monthly time frame? Let's dive into it, guys. All right. From the monthly time frame, what we basically do is look for key level of support, resistance, or what I call primary levels of support and resistance. So I'm going to clear this chart right now, and then we're going to plot primary levels of support, resistance, and then we'll scale down to the next time frame. All right, let's get right into it, guys. Okay, now now looking at this chart, you will notice that I already have certain things on there. I would like to take them out, but let's just use it as we can see it. Now, the first purple line I'm just going to highlight right here, you will notice it obviously that level is a key level of resistance. Why? Because on the monthly time frame, the price is turning from here. So this is a key level of resistance, acting as support right here. Price is not actually close below it and continue to the downside until what price broke through it right here. So this is a key level of support. You can see from back here, key level of support right here. I can easily highlight another one right here. So it tells me what that a key level of what support, still support right here, still support right here. Everything you see is just like a test of candle or a test of the zone. So remember, guys, note this down. A support resistance level, it's not a single price line or a single price. It's usually what a price zone. It's usually a price zone. So what most traders do, or sometimes what I do, is to take a zone or a rectangle and plot a zone around my support level. So price can easily cover a wide range of what of support or resistance. Now, obviously, prior support becomes resistance. It's a rule in the market. So this place was previously a support. If you check here, it was previously what a resistance, price broke below, broke above, broke below, became what support for it. Support. And now it's acting what as a resistance. So tells us that this price, this current price at 1.25 is a key level of support in the marketplace, or key level, now a key level of resistance. So we can see how the price pulled all the way down from that level. So it tells us that there is a key level of what of resistance in the marketplace. And then we can see this level where the market recently just turned around. We can obviously call this under key level of what of resistance or support. So many persons will take a rectangle and draw a wide zone like this. I won't say that is wrong, but probably is the way they were taught or something. But I honestly feel like this will not help you to view the market in the right manner. So what I would rather you do is to look for key psychological levels. Like I can spot a key psychological level right here, which is at 1.2250. 1.2250 is a key psychological level. So let's make that flat. Okay, so I can obviously see now that I've plotted a key level in the marketplace. So it acted what as a key level of resistance, 1, 2, price collapse, like a form of what, a lower high right here, and then price collapse to the downside. Now, obviously looking at this market, I can easily tell that the market is trending to the downside, but I can't really spot lower highs from this marketplace. Now, this is the key level of resistance. I'll find the next key level of support. Now, remember, you want to look for the support that is closer to price. You don't want to be looking for the support that is probably down here. No, you want to look for the support that is closer to price, because that's what you're actually doing. You're actually trading current price. Now, the support that is closer to price was a prior resistance from what year is this? I think 2002 was a prior resistance, like you can see right here. So it's tried to stop price around here, and now it's the next support that is closer to price, and which price has bounced from at $1. So it's a key psychological number, $1. So when price got to $1, it simply means that €1 was equivalent to $1. So that's it, guys. I can now call this a key level of what support. Let me text it that way. Key level of support. Okay. All right. So it's a key level of support. Just as we also have key level of resistance. Sometimes I call it primary support and primary resistance. So just for simplicity's sake, let it be called key level of support so you guys can understand. So this key level of support is currently holding price, and that's why you see this long wick down here. So let's step down to the weekly time frame and let's see what the weekly is telling us right here. Now, you have seen how we have looked at the monthly time frame. We saw that this is key level of resistance at 1.2250. There is a key level of support at $1 flat. So now, what you want to do, you want to look for the nearest level of what of resistance. And if you look at the market closely, the nearest level of resistance is coming in at the price at 1.0350. Is the nearest level of what of resistance. So you want to take note of these levels so as to not miss out or not be too blind to just say, okay, the market has bounced from $1 to just go straight to just go back up to these levels. No, the price cannot just go back to that level. Even though it has bounced from $1, you don't expect it to just move all the way back up to this level. No, it's going to do things like impulse correction back down, probably break that level, find it as support, and before what continue to the upside. And that's why the market trend, it will obviously trend back up. It's not just going to give a single push to the upside. And that's why you want to take note of every level of previous support, because they are likely to become what resistance now, and take levels of previous resistance because they are likely to still act as what as resistance. You can see I acted as resistance here. It's likely to what act as resistance again and then push price what lower. So that is that for that. Now, looking at this market now, I can see and tell that the market is in a downtrend. Why? Because this is a lower low. Price gave a lower high, put in a what? A lower low, put in a lower high, put in a lower low, a lower high, a lower low. Now, what the price is currently doing after bouncing off of $1 is giving us signs of potential lower high before printing what a lower low. So that is it. When the price is trending down, there is high tendency that is going to continue lower. So what you really want to be doing is to look for levels of lower highs to sell. Now, until the price breaks structure and become a higher low point, that's when you'll be looking to buy. You buy at higher low, you sell at lower high. That's just the rule of the game, guys. So let's step down to the daily time frame and look for potential market direction, or what they call trend. Now, even the blind can easily tell, especially those that knows the rule of a trend, can easily tell that this market is currently in a downtrend. Obviously, why? Because it printed lower highs and lower lows. This is a lower high right here and lower low, putting what a lower high, printing what a lower low, printing what a lower high right here, printing what almost did not break the level, but finally what gave us that lower low to the downside. Now the range that we currently have is this lower high point right there to this low. So we have the market trading or giving us that lower point inside of this range between this lower high and this lower low. The price has to give us a lower high somewhere around there before collapsing to the downside to continue what with the trend. Because like the rule of thumb says that whatsoever is happening in the market is likely to continue for as long as possible. Now, on average, when the market is in a bear trend or it's in a trend like this, it takes on average of 2 years to remain in that trend. So it's likely for the market to continue going down, but first it has to print that lower high point or take this recent level of what of resistance to become support. As you can see, it became support here, something like support around here. So we expect it to become what resistance. That's if the price gets to that level and then collapse back down. Now, from the monthly, we have seen that the market is going down. From the weekly, we have seen the same thing. And then for now on the daily, we're practically seeing the same thing. So what do you do next so that you can trade? Because now you cannot just take buys or sell from the daily time frame, except you are a swing trader. Only swing traders take trades like that. But if you're not a swing trader and you're an intraday trader, what you want to do in this case is to step down to a lower time frame, like the 4-hour time frame. And if you have the premium trading view, you can step down to the 8 hours time frame before going down to the 4 hours time frame. So let's see what the 4 hour time frame is telling us right now. Let's go 4 hours. Okay, sorry about that. Second, guys. So let's see what the 4 hour time frame is telling us now. Now, from the 4 hours perspective, I can easily pretty much spot the same thing though, price giving us for that lower low that we are seeing. And then I can also spot that the price from the daily time frame is printing what a lower high point. Now, what I can see and what I can easily expect from here is that price has broken structures. You need to take note of that. If you don't understand structure, send me a DM. If you don't understand what structure is, send me a DM. So I can obviously see now that price has broken structure and is currently sitting above a previous what resistance turn support, although price is now stooling. What I want to do in this case is to look for key levels or key psychological levels. Now I'm going to impute a resistance. You can see that price is stooling around here. So it means that there is a key psychological level somewhere around here. Previous level of what supply became what supply again. So let's see what the price is doing around there. If something is really happening around here, if there is a key psychological number around there, the market is going to tell us. So let's see the coordinate. 1.0250 is a key cycle number. So let's see what the price is doing around it. Okay, you can see how this purple line here is stopping price from continuing to the upside. What does that tell me? It tells me that there is a key psychological number around there. Okay, and remember, guys, in forex or in trading, we try to buy as low as possible and to sell as high as possible. So in this case, you don't want to be buying somewhere around here. Okay, you want to be buying when price gives a better dip. You don't want to be buying into a resistance. Obviously, now we can see that there's a resistance here. Resistance. So there's so much buyers there. There's so many buyers there trying to push the price to the downside. So in this case, I want to step down to the last time frame, which is the 1 hour time frame, and break down the structure clearly. But meanwhile, I can see that the price is stooling. I can see that the price is stooling around here, not going lower, and around here, not going higher. So I've been able to establish that the price is what in a range. Remember, when the price is in a range, it does just two things. What is that? It gives you what an impulse to the upside, a correction back down, an impulse just bouncing, an impulse to the upside, correction like that, impulse, correction back down, or impulse up, impulse down, impulse up, and just keep doing this for for a while. Okay, I think that's exactly what the market is doing right here, because it's bouncing between two consecutive levels. So let's step down to the last time frame, which is the 1 hour time frame, and see what the market is currently doing there. So the 1 hour time frame is a time frame where people usually get entries and shit like that. Now, if you are trading this market for a potential, you are looking at it for a potential trade. Now you have to break it down first. Okay. Now, price gave what this impulse to the upside. Seemed like an impulse to me. I don't know if you gave an impulse to the upside. Let me take my drawing too. So you give an impulse to the upside, give some sort of correction, and then this final impulse to the upside. Very, very nice impulse. And then price start to stool around this level. The price start to stool around this level. What does that tell me? It tells me that price is currently what, at a resistance. This is the resistance up here, and this is the support down here. Now, note guys, whenever we are in an uptrend, whenever we are in an uptrend, resistance is very soft and it's easily broken. And whenever we are in a downtrend, resistance is highly, very strong, very, very strong, but support is easily broken. So in this market, from the monthly, the weekly, the daily, the 4 hours, we have been able to identify that the market is in a downtrend. So what that tells me now is that resistance is easily going to be broken. Resistance is easily going to be broken, but support we had, resistance is hardly going to be broken, but then the support is easily going to be broken. Okay, remember, let me state this again. If you have a book and a pen there, write it down. Whenever we are in an uptrend, resistance, which is usually above here, is easily broken. Price can easily slice through it, but support is always stronger, because price supports push price higher. Just like, let me explain easily. Whenever the market is going up, it gives you what, higher highs, higher low. So if there is a higher low point at the support, it's going to hold firmly, higher high, higher low. So this is the previous word resistance. It will turn what, support. So support is going to hold firmly and bring towards a higher high. But then if you're in a downtrend, the reverse is the case. The resistance is very strong and then the support is very, very weak. So price can easily pierce through the support and resume its downtrend. So currently we can identify and see that this is a rectangle or a flag, whatsoever you want to call it. But what I can easily tell you is that price is just bouncing between the support and the resistance. And back to support, now at resistance. So back to support, price is currently at resistance. So what would you want to do if you wanted to take a trade? For me, I would rather want to sell and have my stop loss right above. I would rather sell, have my stop loss right above the range. Okay, I'll sell like this, have my stop loss above resistance, something like this, and then my first take profit to be at the support level. Okay, second take profit to be at probably the next key level down there of support, which is at $1. Okay guys, so that's it. That is pretty easy how to break down a chart. If you're trying to break down a chart, you would have to start from higher time frames. Okay, you have to start from higher time frame. If you don't break your charts using the higher time frame, you will not easily get what's happening in the marketplace. Now, I've been able to identify that this market is in a bear trend. Nonetheless, what we are seeing is just a counter trend move or a retracement back up. Connected in lows right now. If you want to connect the lows right now, we can easily tell that this is a low. I can easily connect it like this, and I'll find out that the market is currently breaking it or something. So I'd rather favor the bears more than the bulls in this case. So guys, we've come to the end of this video. If you want more videos on how to break down a chart, just send me a DM. The peeps be with you folks. Trade safe, guys.